You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 29th day of October, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. That will give you one-click access to the show each and every day. It also gives you access to the chat box or the question box so that you can ask questions and participate in the discussion. On the days you're out of your office, away from your desktop, there's two other ways to join the show. Just grab any internet-connected browser and point it to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. You just won't have access to the chat box. And we also stream live each day on our YouTube channel. And that's very easy to remember. youtube.com/CFRN. Not only do we broadcast live each and every day, we archive every daily show, and currently we have over 1,800 daily live broadcasts archived there for your educational and viewing pleasure. With that, we'll open with a word of prayer. Heavenly Father, we thank you for your blessings, for your mercy, for your grace. God, you are the foundation stone on which we have built this business. You are our God, the wonderful creator of everything that we are and all that we can see. We ask for a blessing on the work of our hands. May the reign of your kingdom be extended in this company. We desire for you to be involved in every area of it. Blow upon this venture and fill it with your mighty presence. Come, direct, shape, mold, and take it so that it can be excellent for you, for your kingdom. May CFRN be a source of great blessings and goodness to everyone it serves. We ask this in Jesus' name. Amen. Amen. Happy Friday,
Amen.
guys. I hope it is a happy Friday for you, whoever you are and wherever you are. Let me give you the numbers from around the world. These are the cash markets, the indices, as they're known. Currently, the Dow up 50 points, NASDAQ down 20, S&P 500 unchanged, and the Russell 2000 down 1.25. So pretty quiet trade. In the commodity basket, crude oil up 11 cents, trading 82.92 last. Gold down $23.50, trading 17.7910 last. That's a drop of over 1.25%. Silver down 14 cents, trading 23.98 last. In the Asian markets at the close, Nikkei posted a gain of 72 points. Shanghai rose 28. The Hang Seng fell 178. And in the European markets at the close, FTSE dropped 12 points. The DAX fell 8, but the CAC rose 26. That gives us a mixed day in Asia, mixed day in the UK, and so far it is a mixed Radio Friday here in the US of A. We've got two of the major indices in the green, the Dow and the S&P, but just barely. And we've got the NASDAQ and the Russell in the red, but just barely. So with that, we go to Michael, get a recap of everything that happened in the live training room this morning. I see somebody has their hand raised, Michael, so I don't know if I've got a question for you or not.
Well, the one that Jacob, was it Jacob that has his hand raised? If it is, yeah, I already responded to him.
Okay, doke.
Yep.
Well, I can see your charts, so take it away.
All right, here we go. Here we go. All right. Good afternoon, everyone. Let me scroll down just a little further here. Okay. Good afternoon, everyone. Today is the last trading day of October. It is 10/29/2021. If you have not taken a free trial with us and you want to, then go to the homepage here at eminitrainingschool.com. On this page, all that we ask for is your first name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button and you will be sent a confirmation link. You must click on the confirmation link, okay? If you don't click on the confirmation link, you don't get a free trial because we don't know that you took the free trial. All right. Okay. Recaps. We had another green day today. Again, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 29th day of October, 2021. Today we made 11 ticks in crude, 33 ticks in gold, and 4 ticks on the ES. That put us at plus 490 on the morning session. Today it took 6 minutes and 1 trade to get to the goal for the day. At that point we're up $100 a contract, and we took a total of 16 trades. So we're going to end the month of October plus $11,397. Now that's over 19 trading days, averaging $599 per contract per 2-hour trading day. It was actually a little bit more than that, but I took that day out. That day was a positive day. I just took it out because we were back and forth with data. We've now gone 206 out of 209 days on the year, getting our goal, and that puts us at $122,207 per contract per 2-hour trading day. All right, that's over 209 trading days, averaging $584 per contract per 2-hour trading day. All right, now let's get into the trades themselves. All right, so we'll start out with the ES because we only had a few trades on the ES. And, you know, I want to say the ES was hitting the numbers that we were given for it for the most part, or getting close to them, but it just didn't give a lot of trade opportunities. It started out right here, going up toward the zone. Now, I had highlighted this number down here for some reason. I think I was looking at that on a 30-minute, thinking it was going to get down to that number, and it doesn't look like it ever did. What it did do is go in the opposite direction. We got through this weekly trading zone here, and it gave a long trade there that I missed, a long trade there that I missed, and a trade here that I got 12 ticks on. All right. The next trade we got was a break even. I missed that short right there. That gave a little bit of profit. It looks like I missed another short right here. I should have grabbed that one. That gave a little bit more profit. Turned around, I grabbed this one. It stopped me out pretty much to the tick, and then it ran up. And I was putting these numbers in up here toward the end of the session, but this one stopped me out to the tick, and that put me at plus 4. All right, I was at plus 12. And that took 8 out of it. As we moved over in this direction, there was a little bit of a long trade right here during the break. It would have been a break-even trade for me. Okay. Now, the markets were a little tricky this one. I mean, they were okay to trade if you're looking just at the 4-tick range. But, you know, I was highlighting all these numbers earlier this morning, like this one on the upside. Now, what you can't see here is the wick on this candle because it's covered by the black step line, but the wick actually goes all the way up to here. And I was trying to find the good vacuum spots where price might move quickly. And right now, gold has one on the top and on the bottom. But the top one, if we break up above right here at 1780.1, it should make a pretty quick move up to 83.6, maybe 84. Okay, the vacuum spot being right here within this candle. Now, the window of opportunity. what I was showing with all this was if you look all the way back here, looking for areas of support on the way down, and to see if there's any windows of opportunity where price should move quickly. This is what I was looking at. And we did get some quick movement here. And then I was looking for some more opportunities on the way down to here, because this is all the way down here is that next level. All right. Now, the way it's coming together, it's got a little bit of a triangle going on right here, and it's going to break out either to the upside or the downside probably by the end of today. But it was one of those days where you just had to trade what's in front of you on the 4-tick range because it kept, you know, it wasn't committing to one side or the other. In a big way anyway. All right, so we missed the first trade here, but on gold we picked up these 10 ticks. That's where we got our goal for the day. All right, I missed this long right here that was close to stopping out, and then it ran up and did what it should have. Our next trade was over here that we picked up. I think we got another 10 ticks there to put us at plus 20. And this whole thing right here, I got 1 tick to put me at plus 21. And I missed some nice trades here. 1 there, 1 there, and 1 there. And I grabbed 1 more tick here to put me at 22. I missed a break-even trade right there. See, it was going down to the levels that I was giving pretty much every time, going down to the levels. But it was just taking a while. Now here, I think I was break even there, break even there, break even there. Then I got sick of taking break-even trades, so I wanted to let it establish a trend, and then it just kept going and going and going right down to all these levels. It didn't pull back. When it finally did pull back, it brought the cycle back up with it, so we didn't end up with a trade setup. I got one more tick over here. That put me at 23, and missed a bounce off the BBC here. I tried for that one, but I didn't get filled. And that one was the highest probability trade, along with oh, there's one over here. It wasn't the highest probability trade, but when I took these trades, what I was pointing out was the MA1 was blue and the cycle was blue. Really high probability trade. And then we got to this one, and the MA1 was the wrong color and the cycle was the wrong color. And this one took a while to actually work. This one, the MA1 and the cycle were both the right color. This one, they were not. This one, they were. This one, they were not. But this bounce off the BBC right here, everything was the right color for the move down. That was a good one. Right here, again, everything the right color. Had a couple of break evens in here. I just missed that. I was watching this happen, and I was looking at these levels down here. I wasn't watching the actual trade, and I missed that. So over here, we picked up a little bit more. I'm not sure I even counted that. That was a break even. We had plus 10 right there to put us at plus 33. And see, I highlighted these areas, but it didn't go to those areas directly. It kind of chopped around a little bit, and then it got back to them. See, this one here equals this one. This one, it went right through up to this one, and then that one. And that was where we wrapped up the morning on gold. Okay, so crude oil. Now, crude was, well, it was difficult again. And again, I kept going to the 30 minutes to try to figure out which way it was going to go. And it couldn't make up its mind. It just couldn't make up its darn mind this morning. And I was looking for windows of opportunity, and they're kind of hard to find. All this was from last week, I think, right? October 21st? Yeah, it was. There was something that I had made yesterday. While I was talking yesterday, and it went and did everything that I thought it was going to do, but I can't find it right now. Let's just get into what we did do. Now, the morning started up right here. I missed along here. I missed along there. Both would have been nice, profitable trades. I finally did get in trade here, and I got a break even. Then I stopped out. So I was -8. I had another break even. I was looking for price to get up to here, but it didn't go. Instead, it turned around and started going down. Right here, we picked up 9 ticks to put us at +1. Then it got all choppy in here, and Slingshot was all messed up. We get into here. I got a break even there, and then it gave another long trade here. I was looking for it to get up to that level. It did eventually, but I wasn't in it. I got +1 here. That put me up to +2 on the morning session, and then we're getting toward the end of the session, and right in here, I did actually take a trade right in here. I think I took this one right here. So let me write that down because I did pick up 9 ticks on that. I took that in the room, and I was looking for it to get up to all of these levels, but right here, I just had locked in 9 ticks on that to put me at +11. Okay, right there. And it gave one more shorting. This is how it was ending the morning session. I was saying that this is, if this works out, this is the neckline that it's going to have to break on the way down for it to continue down to this level. But it never broke the neckline. It was establishing the right shoulder of the head and shoulder pattern. See, this would be the shoulder. This is the head. This would be the other shoulder. But it never continued and fully established it. It did give a short trade here that went just enough to get the stop to break even. And then it turned around and went through all these numbers right here that I had said I was expecting it to get to. Went right through all those. It didn't give you a trade setup all through here, though. All through here. It just didn't give a trade setup. And that was crude today. So it was an interesting day. Right? The markets weren't as easy to trade as they normally are. Well, as they can be. But anyway, it's the way we're ending October. Right? Hey, and happy Halloween to everyone. On Sunday. Anyway, we're going to have a ton of kids here at our house. But that said, today is the 29th day of October, 2021. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. We made 11 ticks in crude, 33 ticks in gold, and 4 ticks on the ES. Put us at +490 on the morning session. Today it took 6 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract. It took a total of 16 trades. So on the month now, we're up $11,397. It's over 19 trading days, averaging $599 per contract per 2-hour trading day. On the year, we've gotten the goal on 206 out of 209 days. That puts us at $122,207 a contract. That's over 209 trading days, averaging $584 per contract per 2-hour trading day. Now this number right here, if you were to quit when you got your goal for the day, you would have, and you added 1 contract per month. We're going to add another contract next month. It'll go up to 11. You would have only worked a total of 55.9 hours, say 56 hours so far this year. And you would have averaged $2,563 per hour on the year, adding 1 contract per month and quitting when you got the goal for the day. All right. Okay. Now, if you've not taken a free trial with us and you want to take a free trial, go here to eminitrainingschool.com. On this page, all that we ask for is your first name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must click on that confirmation link. Okay, if you don't click the link, we don't know that you took the free trial. So you got to click on that confirmation link. Okay. All right. That's it, guys. With that, I'm going to pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking the South Mountain, America's largest city park. Dwayne, if you are ready.
I'm ready, sir.
Excellent.
Recap of the recap.
Today it took 6 minutes and 1 trade to get to $100 per contract.
Good job.
Thank you.
As always. Okay, guys, Valerie's still working on the recap. She had some other things to do. And so, as she does that, we will just dive right into the daily chart of the S&P 500 E-mini futures, where we have a new all-time historic intraday high and potentially a new all-time historic closing high if we hold. So we got to grab these fibs, pull them up to the top. That fibs in the area, so that's pretty close. And this other one, this represents the entire bullish move up that began last year. And some days I can grab it, and some days I can't. Oh, almost had it. Oh. Okay, take it to the top. That looks pretty close. Okay, so now our 24% Fibonacci price retracement is down at 45.16. We actually had a weekly trading zone at 45.14/15. This was bearish, followed by a bearish day that ran into support at the step line. Whatever market you're trading, whatever time frame you're trading, when price drops to the step line, you have to anticipate that it's going to be support until proven otherwise. Well, the following day did not prove otherwise. We had a nice big green candle yesterday, but we closed off the high of the session. See where blue and climbing is? Just as the step line represents potential support, blue and climbing represents potential resistance when it gets above price. When it's alongside price like this, that's bullish, and we continue to anticipate higher prices. But as this thing starts to make his arc, look over here, okay? See how blue and climbing becomes red and falling? Okay, are we at that point yet? It's too early to say. The high of the session is just that, the high of the session. And that new all-time historic intraday high is 45.96 and a half. Okay, see what the remainder of the day brings. Support below us at the low of the session, which is also the step line, which is roughly 45.69 95. You can read it right there. Now, we haven't had much of a pullback, quite honestly, to be able to do our projections. If we wanted to use this as the low to the high to the retracement low, we could project some numbers in the future. But we're actually using this as the last leg up. And if I were to go from here to here to here, we would have already exceeded the 100%. I'll show you what I mean. From the low to the high to the retracement low, we've already exceeded the 100%. Okay, so we're going to hold off on those projections. I'd like to see a little better of a pullback. Now we can measure it the other way just to see what it looks like. No harm in that. I just deleted the wrong set of fibs. That's okay. We can put them right back on. It's the beauty of fibs. Alright, so if we want to measure this way, from this low to this high to this retracement low, right there, that puts the 24% Fibonacci price extension overhead at 4607, the 38 at 4646, the 50 at 4678, and the 62 at 4709. Okay, so you might want to grab a screenshot. You might want to jot the numbers down. In fact, I'll tell you what I'll do. I'll grab a screenshot. Oh, I didn't grab quite enough. Start over here. Okay. And so, now I'm going to take this, I'm going to put it in the alert trial discussion group so that everybody, even those of you who are not yet passport holders, can still see those projections like this. Okay? Alright. Now, pull this down. I'm going to make these go away for now, but we've archived them in the discussion group. If you're a passport holder and you're not connected to the discussion group, if you're on trial and not connected to the discussion group in Telegram, you're missing an awful lot. Okay, Stefan's in there posting charts all day long. We appreciate him very much for that. And I post as time and opportunity directs me to. So from the low put in on October 1st to the new all-time historic high put in today, which looks like it has every possibility of becoming the new all-time historic closing high. We had an all-time historic closing high yesterday. Looks like we could be in for one today. Keep in mind, price is pushing up against blue and climbing. That doesn't mean it can't push through it. It can. But just understand, when price starts to push up against blue and climbing, that often is the precursor to blue and climbing becoming red and falling. So the 24% fibs down here at 45.17. Here's the 38. Here's the 50. Here's the 62. Between the 50% fib retracement and the 62% fib retracement, we had a bullish cross that has led to an extended move. When price revisits the area of the bullish cross, we expect that to be good support. Just like this bearish cross, okay, we waited days for price to get back to that area of the bearish cross where we fully expected there to be resistance. We talked about it every day on the show. All of our shows are archived. There's over 1,800 of them on our YouTube channel, youtube.com/CFRN. And as price was moving up, we hung out for 3 days at the BBC. The pullback to the BBC holds more often than it doesn't. We anticipated this move. We talked about it. Lo and behold, it was almost as if we were in control, because that's how it unfolded. You know, it doesn't always unfold perfectly in an orchestrated type of manner, but that's a textbook example. And so price comes back down, gets through the 24, gets through the BBC, the 38, the 50, and right here we look for a real nice bounce. Okay, all right, so that's really everything I can share with you from a daily perspective. S&P 500 E-mini futures. Now the reason we focus on the daily chart of the S&P 500 E-mini futures, a guru taught me years ago that the S&P 500 was, in his terms, the bellwether. In other words, the other indexes, the Dow, the Russell, the NQ, ultimately they go where the S&P goes. Now, sometimes one gets ahead of the S&P, and another time some will lag behind the S&P, but ultimately, wherever the S&P goes, the other markets follow. Okay? Now, we'll go. Oh, I don't have the Logic 247 recap, but what I do have are the concierge trade alert numbers. And, oh, looks like Val did do. She did do the recap. I'm sorry, Val. I didn't see that pop up. Okay. So, thank you very much for that. And let me format it from my screen so that I can share it with all of you in the audience. We're in week 169.
I was just being sneaky there.
You snuck it
Slipped
in.
it right under your nose.
You did. Okay. So, here's what we got so far. Markets don't close till 5 p.m. Eastern. Stock market closes at 4 p.m. Eastern. Futures market closes at 5. So, we're in week 169 of Logic 247. That's a 24/7 around the clock E-mini alert service. Alerts can come out at 2 a.m. or 2 p.m. because the markets trade around the clock and we have traders around the world. Our day session is their night session and vice versa. The criteria for posting an alert is whenever opportunity presents itself. So, this week, we issued a total of 59 alerts. 5 never triggered, still waiting on the outcome of 5. That gave us 49 actionable alerts, of which 6 or 12% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, using market structure and a very simple 3-step process that we teach all of our traders. Now, our original alert service, concierge trade alerts, the format for those are different. Instead of coming out around the clock as opportunity presents itself, the CTAs are posted as a static report, good for the entire session. Okay, last night got them out at 7:45 p.m. Eastern. two numbers for each market: S&P, Dow, Russell, crude, NQ, gold, and silver. By the way, if you want to grab a screenshot, now's a great time. Here's how it works. Once this report is published, you go to your corresponding chart, draw a line in the sand at 45.91. Draw a line in the sand at 45.62. Do the same for whatever market you trade. Once this is posted, if price starts trending up towards 45.91, that's obviously bullish. And so our strategy, Logic 247, and everything you learn in the live training room will have you looking for opportunities to be long the market. If, once this is posted, price starts trending down towards 45.62, that's bearish. So our strategy and Logic 247 and everything you learn in the live training room each day will have you looking for opportunities to be short the market. Okay? So, with that said, let's head over to the 30-minute chart of the S&P. Okay? Last night, the long CTA was 45.91. And these little windows that I drew in yesterday during the show, well, that one got filled and that one got filled. Okay. Now this vertical line separates yesterday from today. From 45.91, we've put in a swing high so far at 96.75, so that's 5 3/4 points. Call it 5 points, $50 a point, $250 per contract traded. And overhead is this week's highest weekly trading zone. Now you'll notice that when we opened last night, we had a bearish cross, we had a retracement, and then we continued down. And the market found support at the weekly trading zone. 45.65/45.66. These weekly trading zones are given to our passport holders, all of our members, every Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change, we don't massage them, we don't manipulate them. So as price was falling last night, we expected this to be support. That's just how it works. And it was, but we had some wide-ranging consolidation, volatility, whatever you want to call it. The short CTA trigger was 45.62, and we made a drop here. I say we made a drop here to 59.75. So let's call that 2 points. $50 a point, it's $100 per contract traded. Price got back above the trigger and delivered another 2-point trade. Price got back above the trigger and delivered another. This one, you know, you might have been skeptical of, but then price pulled back up. And now you've got a little flash of red and falling there. And so, yeah, maybe you took this one, maybe you didn't. If you did, it delivered another 2 points. 2 points, 4 points, 6 points. Okay? That's if you passed on this one, which, based on the guidelines, that would probably be the proper thing to do. Okay? And you may have shied away from this one as well. Alright? So, the main thing I want you to get here is that just as when price dropped to this weekly zone, it was good support. When it dropped back to it again, it was good support. And here's all this consolidation at the weekly zone. Now yesterday we did have a slice. Only 3 things happen at a weekly zone. The most likely thing is consolidation. This. The second most likely is rejection. And when I see a good rejection, I'll point it out. We had a slice yesterday. And when price slices through a zone like it's not even there, What typically happens is price will then retrace, like it did. This was a red candle, all the way back to the zone it sliced through, and then it continued in the direction of the slice. So in a marketplace with endless opportunities and possibilities, we narrow things down. At a weekly zone, one of three things is going to happen: consolidation, rejection, or the slice. Now, because it's a business based on probabilities, there's endless possibilities and probabilities out there with all the different markets and all the different ways to trade the markets. So we break it down to just three. The market's either going to go higher, lower, or do nothing, which is sideways or consolidation. Okay? So we've taken a world of infinite probabilities and boiled it down to three. And when you learn how to read the chart, I mean, we got support for hours. And then we had a candle that really showed its stuff. Gave us a bullish cross. Price pulled back to the BBC. And off we go. That's what happens over and over again and again, day after day, across all markets and all time frames. Everything we teach is fluid across all markets and all time frames. It doesn't matter if it's the S&P 1 minute or the monthly chart of wheat, corn, or crude oil. Price flows from support to resistance, back to support, back to resistance, back to support, over and over, again and again. In fact, last night I took a chart and I just pulled some wacky numbers out of the air. And I showed how price flows on every possible time frame. Everyone's always looking for that magic time frame. The 5 minutes is the magic one. No, the 4-tick range is magic. No, Dwayne's proved that it's the 30 minute. That's where the magic is. Okay. There is no magic in any time frame. The only magic in any time frame is you and the amount of time you've spent watching and observing that time frame, and you understand what price is telling you and how it's flowing. You understand where price is trying to go. You know that price always has an objective. Price is always trying to get to a weekly trading zone. When price is above the BBC, it's trying to get to the zone overhead. When price gets below the BBC, it's trying to get to the zone below. When price gets back above the BBC, it's trying to get to the zone above. See, in this world of endless probabilities and possibilities and all these other things, if you can just boil it down to the simplest common denominator, and no matter what time frame you're looking at, is price more likely to go up or go down or do nothing? It may do nothing for a while. This little candle's done nothing for a while. If we take out this high, then ask yourself this question. If we take out this current swing high, is there a greater probability of price going to this zone or coming back to this zone? Even if you're brand new with us, hopefully you got that answer nailed. Okay? If we take out this swing high, because see, we had a strong bullish move, but we hit resistance, right? And price backpedaled a little bit, but we know that price never travels in a straight line. The smaller the time frame, the more you can see the back and forth channeling, back and forth, back and forth. Now, I do use the 30-minute as a reference point to make my decisions on smaller time frames. That doesn't make 30 minutes magic. For some people, their magic's an hour. For some people, especially a lot of Forex traders, the 4 hour is their magic. Okay? I don't call it magic. I just call it the chart I look at to help me understand on my smaller time frame, do I want to be looking for long trades or short trades? On my smaller time frame right now, I would be looking for an opportunity to go long. Yeah, but what if price drops? Well, then price drops. Price will drop until it finds support. If this red candle continues down, where would we expect to find support? At the step line. If it gets through the step line, where's the next support? Blue and climbing. If it gets through blue and climbing, where's the next support? The BBC. Pull back to the BBC holds more often than it doesn't. Held here, held here, held here, held here, held here, held here, held here. Now, you have heard me say more than once that once an alert triggers, there is a greater probability of it triggering multiple times than not triggering multiple times. I mean, even though these are only 2-point moves, look at how many times it triggered. Is it possible that this candle wants to pull back, get below the trigger, the important price, the important area, and then find a little support here at the step line, just like on the daily chart? See how we found support at the step line? Everything we teach is fluid across all markets, all time frames. So yes, this red candle could come down, find support here, trigger on the long side again. We'll come back and check on it in a few minutes and see what it's done. Am I interested in placing a trade right here, right now, on any smaller time frame? No, because I don't yet have a clear picture of what the market's trying to do on the chart I've spent the most time with over the last 169 weeks. And that's the 30-minute chart. Well, a lot longer than that, but since it's been tracked publicly. Now, learning to read a 30-minute chart allows you to understand what the next high probability move is in the market. Based on 8,900 and something trades, that's how many Logic 247 alerts have been issued around the clock over the last 169 weeks. We know that on average, 20% of the time the market is going to do something other than the next high probability thing. Those are pretty good odds. So with that, we'll go to the Dow. Okay. On the Dow. Now, this green line extends way back, and I could take the time right now to tighten it up, I suppose, just so that you understand what I mean. This CTA is only for today. Okay? The short CTA is only for today. Okay? So I just did a little housekeeping. So now it makes more sense. Okay, so market opens last night at a weekly trading zone. Price is always trying to do what? Trying to get to a weekly trading zone. When price drops to a weekly trading zone, what do we expect? Support. When price rallies up to a weekly trading zone, what do we expect? Resistance. And we got resistance here. We finally broke through and made it to the target of the long CTA. We hit that weekly zone, and what do we get? Well, that's what resistance looks like. You've got a published entry and a published target. You've got a published entry and a published target. Okay? It's almost like paint by numbers. Remember those when you were a kid? I was horrible at those. Gosh, just horrible. Okay, 35,540 was the trigger. The zone is 35,515. So / 520. So from the trigger to the zone, 20 points. From the trigger to the zone, 20 points. Back above the trigger, and this time 20 points. And this time not so much. The low here was 31, so that was only 9 points, $5 a point, $45 per contract traded. And then we got another 20-point move, although, okay, now we're below the BBC, so it's okay to short. But overhead, you got blue and climbing, right? So whether you decide to take these would be a matter of personal preference, but the market handed you another 20-point move, another 20-point move, and another 20-point move. 1, 2, 3, 4, 5. 20-point moves on the downside. On the long side, 35, 645 trigger. The first run up takes us to 692. So 45 and 45, 90. So we'll call it 45 points at $5 a point. $225 per contract traded. That's what the market made available. And then price got back below the trigger, and it just got rejected right here at the CTA. Price often behaves around the CTA the same way it does around weekly trading zone. Then we make another run, and from 645 we put in a high at 695. So from 45 to 95, 50 points, $5 a point, $250 per contract traded. Then price got back below the trigger again. This time it ran all the way to the target. From 645 to 730. So that would be 85 points, $5 a point. It's basically $400 per contract traded. Support. Support. Resistance. Resistance. I hope you see the importance of the weekly trading zones. Okay. That and the BBC always lets you know what price is trying to do. When price got below the BBC, well, we knew it was trying to get to the zone below. Now, just because it's trying to do something doesn't mean it's always going to be able to do it. But in this case, it did. And then when price got back above the BBC, we knew it was trying to get to this zone. And then when price broke above this zone and held, we knew it was trying to get to this zone. We've published the zone since December 14th of 2009. Okay? That's over a decade. And the zones have behaved, price has behaved at the zones exactly the same, day after day, week after week, over and over, again and again. Okay? How's it possible on a Sunday night to know that this is going to be potential support or that this is going to be potential resistance? It's a God-given gift. True story. Okay? You will not find it published anywhere or discussed anywhere. Just make sure when Monday morning rolls around, you get the new zones on your chart and the previous week zones. Don't throw them out. Either color code them on your chart, write them down on a piece of paper in your journal, because Sunday night we're using the previous weekly zones, and then the previous weekly zones do hold sway over the market into Monday, sometimes into Tuesday. Sometimes they can remain of value the entire week. So, all right, you go to the Russell. And the Russell never triggered. Not on the long side, not on the short side. We opened here, we pulled back to the BBC. Price did reach down to the zone. It's almost like one of those obsessive compulsive things, like I gotta touch it. So it touched it and it touched it. And when price drops to a zone, what do we expect? Support. When price rallies up to a zone, what do we expect? Resistance. Zones are an area, okay? So we didn't touch this one to the tick, but we got to 2302.70. So we missed touching it by 1.3. Okay? And then price comes back to the BBC and bounces, then it comes back to the BBC and bounces. When price pulls back to the BBC, the pullback holds more often than it doesn't. Okay? NQ. Short side on the NQ last night. CTA was 15,663. This first drop took us to 45. I don't want to do it in my head. 63 minus 45. 18 points. $20 a point. $360 per contract traded. Price pulls back to the BBC and the pullback holds. Holds more often than it doesn't. Kind of like it did here. Anyway, so we come down through the trigger again. Now, the issue here, of course, blue and climbing has showed up. Okay, the amount of time it took for this pullback. So, you know, whether you shorted 63 down to blue and climbing, okay, that would have been about 13 points. But the guidelines say you should probably just pass. And then here, price wasn't able to get back above the trigger because it pulled up to the BBC. You shouldn't have to wait for a CTA or a Logic 247 alert to take a trade. Michael and Valerie are teaching you every day in the live training room for 2 hours, interactively, where Michael's putting on, taking off trades, explaining everything he's doing, and you're able to ask any question you want. You're encouraged to ask any question you want, because if you ask all the questions that pop into your head, pretty soon you'll run out of questions. There's a rule for everything in the live training room. It's mechanically based trading. It's a mechanical methodology. Whatever question you have, we already know the answer. All you have to do is ask the question and we'll give you the answer. Okay? Mechanical trading and discretionary trading are two different things. You need to learn the mechanical model of our strategy first before I can bring you into the world of discretionary trading. Okay? And so on the long side, the number is 15,785, not 785 and a quarter. And from 1578 we put in a high. From 785 we ran up to 794. That would be 9 points at $20 a point. That's $180 per contract traded. And now price is dipping back below the trigger. Okay. All right. Crude oil. The bearish cross. Price pulls away. Price pulls back. So we get a leg. We get a retracement. We get a leg. We get a retracement. We get a leg. Why did price stop here? You should always expect previous resistance to be resistance, or you should always expect previous support, in this case, to be support till proven otherwise. What would proven otherwise look like? It means price would trade below this low and give you a little window of opportunity down to this bullish cross, which would potentially be support, and then if price could get below that, then a nice trade down to the weekly zone. Okay. Now, we know that not, while the pullback holds more often than it doesn't, we know that not every pullback is going to hold. Okay. In this case, we got a heads up that this pullback may not hold because we turn from red and falling into blue and climbing. You get a bullish cross, and price makes a run right to the weekly trading zone. 15,746. And that is this week's highest weekly trading zone for the NQ. I got nothing else for you overhead. Okay? So be cautious on the long side with the NQ. Not saying it can't go higher. Looks like it wants to trigger again. Let's see what happens. Crude oil. Short side on crude last night was 82.20. Okay, the first drop took us to 82.08. So that's $120 per contract traded. Price then got back above the trigger, but it ran right up to the weekly zone. Remember when price pulls up to a zone, what do we expect? Resistance. What do we get? Resistance. Which sent us down for another trigger. That trigger took us to a swing low at 81.76. Let's call it 81.80 for the sake of math. That's $400 per contract traded. Then price got back above the trigger, dropped again, back above the trigger, dropped again, this swing low right here. $81.63, call it $81.70. It's $500 per contract trade. Where did price run into resistance? Trying to trigger on the long side at the weekly zone. And then after all this, where did it run into resistance? At the weekly zone. Remember, these numbers were given out to our traders Monday morning at 6:15 a.m. Eastern. It's now Friday afternoon, 1:03 p.m. Eastern. When you become a passport holder, all of this becomes yours. All the work we've done, Michael and I have done together since 2006, everything we've done becomes yours. As a passport holder, you have access to everything we do, everything we've ever done, the stuff we're getting ready to do in the future. You own all the tools, the indicators. You have access to unlimited one-on-one mentoring. You have live training every day. But the most important of all is you have a teacher. A real live human being that teaches you how to trade day by day, trade by trade, tick by tick, explaining everything he does as he does it, and answering your questions. It's not like you're just buying some course that's going to quote unquote teach you how to trade. You know, and maybe it's got modules. Wow, module number 1, module number 2, module number 3. Okay, when you get to module number 10, what happens when you still don't know how to trade? Well, I guess you'll probably get an email from customer support that says, well, you must just suck at trading. You probably should become a plumber or an electrician. See, that doesn't happen with us. Because a passport is lifetime membership. You're never left hanging in the wind. Okay? There's always somebody there to help you, to support you. You have 24/7 access to us through the Telegram discussion channels. Nobody else does this stuff, folks. If you want to be a part of the family, all you got to do is go to eminifuturestrading.com. Get your passport. You become a member for life. And let me say it again. Everything we do, everything we've ever done, the stuff we're doing in the future, and all of our tools, you own those for life. Now, lifetime membership means lifetime membership. There's no annual dues, no monthly recurring fees. None of that. You pay once, you're grafted into the family for life. So, eminifutures.trading.com. If you get to this page and get confused, just call Valerie. 949-42-EMINI, or send an email to support@cfrn.net. Okay, so we covered crude, we never triggered on the long side. All we got left is gold and silver. No trigger on the long side for gold, but lots of movement on the short side. So the trigger was 1798, and so this first trigger, we put in a low here at 1797. That's $100, and there's another $100. And then we get back above the trigger, and this time we drop to 94.6. We'll call it 95. That's $300 per contract traded. Then we get back above the trigger again. This time from 1798 we drop to 1794. It's $400 per contract traded. Then we get back above the trigger, but then old blue and climbing, or blue and sideways, shows up. So perfectly good trade, but if the color blue kept you out of it, that's in keeping with the guidelines. Don't fret. Over here, we get back above the trigger. We're still dealing with blue and climbing. Maybe you want to wait for price to get below blue and climbing so that you have some proof price is really trying to get to the zone below. Or maybe you even wait for a break of this low. Maybe you trade 1791 down to the zone. Now, consolidation at the zone, or support, right? And that support, actually, this sliced. Honestly, it sliced because this was red all the way down, and then it pulled back up to the zone it sliced through, and then continued in the direction of the slice. And where has the market found support? At the weekly trading zone, 1777/1778. What's price trying to do now? Well, it's above the step line. It's trying to make its way to 1785.5, and if the pullback holds, you know, like it did here and here and here and here and here, then it gives us an opportunity to trade to the downside. Now, well, if you now somebody's wondering, well, if you expect price to go to that BBC, you call it, bull bear cross, bullish above it, bearish below it, and why don't you just get long? Well, if you want to, you can. But of the 8,900 individual alerts in the Logic 247 alert channel, they're all trend trades. In other words, price is below the 30-minute BBC, you're only going to see shorts. If price is above the 30-minute BBC, you're only going to see longs. So this would be a counter trend trade. Again, some people, that's their thing. They like to trade the counter trend. Okay, not a problem. It's just not our way, or my way. I would, now, 1782 up to 1785, that's a $300 per contract move. Could it happen? Got to embrace all possibilities. I would simply prefer to wait and let this little bull run its course, okay, because it might not get all the way to the BBC. It might get halfway there and run out of steam. And once that becomes evidence, because price is traded back below the step line, then I'll short it back down to the zone. Okay? Alright. the last market I have for you is silver. Short side on silver last night. It's 2407. And it triggered and it dropped to 2383. 2 pennies, $100. Now, price pulled back to the BBC. It gave us another leg to the downside, but what did it run into? Blue and climbing. Support. Support sent us back up to the weekly trading zone. Resistance. Remember, we consolidated at the zone. We made a run at the zone below. Didn't quite get there. So we ran back to the zone overhead. Resistance. Which then took us all the way down to the zone below. Support. From the zone to the zone, back to the zone, down to the zone. And yes, as a passport holder, you do have access to the weekly trading zones, the CTAs, the Logic 247s, everything we do, everything we've ever done, and the web-based trading platform we're about to launch. Okay? Now, once that's launched and you're able to use our methodology and indicators to trade stocks and other things, will there be a change in price? If you already have a passport, are we going to hit you up for more money? No. No, because when you become a passport holder, you have everything we do, everything we've ever done, and everything we ever do in the future. Passport is for life. Okay? Think about that. How many innovations could there be down the road as we migrate into this web-based trading platform and you're able to trade Apple and Amazon and even your penny stocks if that's what you like? You'll be able to use our indicators and our methodology and our strategy. As I've told you all along, everything we do is fluid across all markets and all time frames. Today's price is quite a bargain for the bright future that it represents. So, Emini, futurestrading.com. If you got questions, 949-42-EMINI, support at cfrn.net. Once you become a passport holder, you have around-the-clock support. Trading is a pretty lonely business. Chances are, in real life, you might not even know another trader. But in our discussion group, you'll find like-minded souls who not only are believers, but are traders as well. You won't run into ugly talk. You won't run into disparaging talk. You'll be encouraged. You'll be uplifted. You'll be helped. When you're the new guy, there's always a guy in the channel who's been around a while, and if you got a question, he can tell you the answer. Because, again, there's already an answer to every question you can possibly ask. Because we start out with a mechanical, rules-based trading methodology. That's your first step. Okay? If you're looking for overnight riches, you want to get rich quick, good luck with that. How much money have you spent chasing that holy grail? Have you found it yet? Of course not, because it does not exist. Okay? If you want to actually learn how to trade from a real person, EminiFuturesTrading.com. And that brings us to our good word for the day. Yesterday we talked about prioritizing our relationship with God. Our scripture yesterday was Genesis 39:2. The Lord was with Joseph, and he was a successful man. Boy, that makes me want to have the Lord around me. If it worked for Joseph, maybe it'll work for me. Today, a little different topic. when justice seems denied. We've all experienced that. Psalm 103, verse 6. The Lord executes righteousness and justice for all who are oppressed. When O.J. Simpson was tried for the murder of his ex-wife Nicole Brown, the jury ruled not guilty. In court, Nicole's mother wept and said, "God, where are you?" It's a question we ask when life seems unfair. Now, the Bible gives us an answer in Ecclesiastes 12:14. It says, "For God will bring every work into judgment, including every secret thing, whether good or evil." But as humans, we want the score settled now. So we struggle, we question, and we doubt. The psalmist did too. In Psalm 82:2, "How long will you judge unjustly and show partiality to the wicked? Deliver the poor and needy." That was the cry of the psalmist. You and I, we wrestle with such questions because they have no easy answers. Then 21 Psalms later, David, who'd been forgiven and restored after committing adultery and murder, writes this: "The Lord gives righteousness and justice to all who are treated unfairly. The Lord is compassionate and merciful, slow to get angry, and filled with unfailing love. He will not constantly accuse us, nor remain angry forever. He does not punish us for all our sins. He does not deal harshly with us as we deserve. For his unfailing love towards those who fear him is as great as the height of the heavens above the earth. He has removed our sins as far from us as the east is from the west. The Lord is like a father to his children, tender and compassionate to those who fear him, for he knows how weak we are." Now, all of that you'll find in Psalm 103, verses 6 through 14. So here's the bottom line. The same grace and mercy that God extends towards you, he offers to the one who hurt you. That's hard to handle, right? Let's say it again. The same grace and mercy that God extends towards you, he also extends to the very one who hurt you. That's something to think about over this weekend. And it's also our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.